Okay, item 15, the comprehensive annual financial report, CAFR, and the related audit reports for the fiscal year ending June 30th, 2017. Robin.
Good evening, Mayor and members of the City Council. In October, I provided City Council with a very detailed financial report with regard to our results of financial operations for fiscal year 16-17. That report was based on pre-audit data. I'm pleased to say that there were only minor changes made based upon the results of the audit, and there was nothing material. I think the change to the general fund was about $2,500, so very, very minor. The city has an independent audit conducted on an annual basis. The resulting CAFR, or Comprehensive Annual Financial Report, and related single audit report are then submitted to the City Council for review and acceptance. This past spring, the city went out to bid for professional audit services. We evaluated proposals and awarded a contract to Badawi & Associates. This was our first year in working with this new firm. They provided us with a new set of eyes, so to speak, as it relates to the city's financial activities and internal controls. The city received an unqualified opinion, meaning that our financial statements are fairly presented. As it relates to the single audit report, there were 3 areas identified where improvement was recommended. There were no prior year recommendations, therefore there was no current year status of the prior year recommendations. What this means from city staff's perspective, we have a very clean audit and our internal controls are functioning very well. With that, I would like to introduce Ahmed Badawi and have him come up. He's the partner at Badawi & Associates, and he can provide a high-level overview of the CAFR to City Council and be available to answer any questions that you might have.
Great, thank you.
They have copies already. They were distributed and available on our website and available to the public as well.
Excellent. Excellent. Thank you. Well, good evening, Madam Mayor, members of the council, and members of the public. My name is Ahmed Badawi. I was the partner on the audit for the city of Yuba City, and I will be presenting the results of the audit to you today. What we've covered today, I'll let you know who the engagement team was, what were our deliverables and the scope of our audit, areas that we emphasized on during our audit process, the type of opinion that we issued, and summarize for you some of the numbers in the financial statements, provide you some of the required communications that we have to communicate to you as your independent auditors, give you a very brief overview of the new accounting standards that are coming your way, and then see if you have any questions for me. Of course, you can interrupt me anytime if you have questions. Engagement team, I was the engagement partner. We always have a quality control reviewer. This individual is not really involved with the city. They are in the background. Their main role is to review my work and the audit team work and making sure that we adhere to professional standards. We also have an IT specialist that we use in order to evaluate the city's computer system and the controls embedded in those systems. We had Mitesh Desai as our audit manager, and we had 2 professional staff, Lisa and Isabel. In terms of the deliverables and the scope of our audit, we were mainly engaged to report on the city's basic financial statements. That's basically the CAFR. Because the city is subject to government auditing standards, we are also required to provide an opinion on our consideration of internal control over financial reporting and on compliance and other matters. The city is also a recipient of federal funds, which requires what we call the single audit, which is an audit of compliance with the federal award programs. So we have provided an opinion on that as well. We also provide or perform an agreed upon procedures on your GAN limit or your appropriation limit. And then finally, communication with the governing body, which is what I'm doing today. And normally we also provide a letter summarizing those communications. So areas we emphasized on during our audit. There were 3 main areas that we give them special attention. However, we audited every account in your financial statements, whether it's a balance sheet account or revenue or expenditure. But those specific areas we have decided to spend more time there. Revenues and receivables and improper revenue recognitions. I do not want to imply that we found any improper revenue recognition, but this is an area by default is an area of higher risk, and therefore we basically perform additional procedures to get comfortable with these numbers. So some of these procedures would be confirmations with the county, for example, about property taxes and all tax revenues submitted to the city. Communications with the State Board of Equalizations about sales tax, sometimes with granting agencies, and a variety of others. Also confirming amount with the county again, and doing analytical procedures comparing prior years to current year, comparing consumption, and a variety of other things. Pension is another area that have a lot of complexity, and the dollar amount is significant. So we spend a lot of time focusing on pension. We obviously review the information provided by the city to record the current year activities for the pension plans. We also communicate with CalPERS auditors. We obtain from them confirmations on how much assets the city have with CalPERS and what kind of control CalPERS have over the census data maintained on behalf of the city. And we do testing of all the reports that the city submit to CalPERS on a bi-weekly basis and make sure that this information is accurate, because that's really the underlying data to calculate the pension liability. Finally, management overriding controls. That's in any audit, this is an area of higher risk. Management are the one who design these controls. They put them in place and they monitor them to ensure that they're being followed. And they can choose to not follow them at any time. So we try to mitigate that risk by first incorporating an element of unpredictability in our audit procedures, testing journal entries and making sure that they're properly supported, reviewing management estimates, making sure that there are no bias in these estimates, making sure that we are assigning professional staff with enough experience to more complex areas, and a variety of other things that we do in order to try to mitigate that risk or at least get it to an acceptable level. So those were the areas of focus. In terms of the auditor's report, like Robin mentioned, we have issued an unmodified opinion. That's basically, in very simple terms, it's a clean opinion. And the audit opinion state that the audit was conducted in accordance with generally accepted auditing standards and with government auditing standards. What an unmodified opinion means, it means that we believe the financial statements are fairly stated in all material respects, that all estimates are reasonable, all disclosures are properly reflected in the financial statements, and that accounting policies have been consistently applied. Wanted to summarize for you some of the numbers in your financial statements. We always like to provide you the last 3 years, even though we only audited the last year, but we relied on the prior audits to basically provide that information. So this slide is the composition of the city's assets over the last 3 years. We audit a lot of cities in California, and Yuba City is no different in terms of what kind of assets you have on your balance sheet. The two largest assets are usually the cash and investments and capital assets. Cash and investments to ensure continuity of operations, and of course capital assets represent all the infrastructure and streets and roads and the things that the city built. Over the last 3 years, I would say that there were really no major fluctuation or changes, just the normal operation things that we would normally see. On this slide is the composition of your liabilities over the last 3 years. And again, I think you will see here that the biggest jump this year was pension. It went from 53 million to 66.6 million. This is really across the board. CalPERS have not met their anticipated rate of return, and that normally will reflect on your pension liability. And we'll talk more about pension in the next few slides, but that was really the biggest change. Otherwise, things were fairly consistent over the last 3 years. Composition of your equity. Your equity is your assets minus your liabilities, and normally we break down the equity into multiple categories. The first one is the net investment in capital assets, and that's usually the largest one, but unfortunately it's the only one that is not in a spendable form, because this is the money that you invested over the years in your assets and infrastructure and they're not really something that you can sell and liquidate. Then you have all these restricted categories, and those funds have legal restrictions on them, outside legal restrictions. So either by a granting agency or a bond indenture or money coming from the state, such as gas tax or some of those funds that basically have legal restriction as to the purpose. And then finally, the last column, the unrestricted amount, those are the amount that under the council control. Those are the amounts that have no legal restriction. However, that doesn't mean maybe council have already earmarked those for other purposes, but basically this is the amount that you can change your mind and say we can spend it on something else if you want to. This coming slide show you basically the change in net position. It's your revenues minus your expenses for the year. I don't like to use the term net profit because obviously that's not what the city is trying to accomplish, but that's basically your revenues minus your expenses. As you can see that for the last 2 years, your revenues were less than your expenses. Not to read too much into that, meaning that oftentimes what we see, especially with capital projects and those types of expenditures, that the money is accumulated in the fund first and then it gets spent after that. So it happens that you see that you're spending on fund balance for the last few years, and that's why sometimes you see the revenues are less than the expenditures. But that's basically on a full accrual basis what the results of operations were. Another ratio that we provide to our client is what we call the net cost of service to tax revenues. So the net cost of service, we look at all city departments and how much does it cost to run those departments. And we subtract from that any revenues that those departments are able to generate on their own. So if you look at public safety, for example, we look at all the costs minus any fines, any forfeitures, any grants, any things that they are able to generate on their own. And the idea is to see how dependent these departments are on tax revenues and whether the city have enough tax revenues to cover those deficits. So you're going to see that for the last 3 years, the net cost of service was higher than the tax revenue. And ideally, you want the opposite. You want the tax revenues to be higher than the net cost of service. But again, I don't have the history beyond 3 years, but if you have been spending on fund balances that you've accumulated in the past, then this is how it's going to look like. But it also can be that your tax revenues are not sufficient to cover all your expenses. And at some point, you will need to either raise revenues or reduce expenses or something of that extent. If we were to focus just on the general fund, obviously the general fund is the measurement of the city's liquidity. This is where most of your unrestricted resources are accounted for. If we were to focus on the general fund, what we do is we look at your unrestricted fund balance and we compare that to your annual expenditures. And the idea is to see in the very unlikely scenario that all your revenue sources stop coming in, how long can the city continue to pay bills? And we have determined, and I'm sorry, I'm just making sure it's 2.2 or 22. But basically, we have determined that you probably can continue to pay bills for about 2.2 months. The Government Finance Officers Association recommend a minimum amount of 2 to 4 months. So you're right at the minimum. So it's definitely something to keep an eye on. Of course, you want to grow that number. You want to make sure that you have those proper reserves. If we start focusing just on pension, you will see here that this was your pension expense over the last 3 years. And you can clearly see that in 2017, your pension expense went up significantly. This is not something that the city has caused. It is really just mainly driven by the investments of CalPERS and CalPERS performance. If we were to look at how much money you have in the plan, so this is your safety plan, you will see that as of the most recent actuarial valuation, the most recent information we have from CalPERS, the city had about $92.5 million in investments with CalPERS, had about $124 million in liability, and that left you with about $32 million in unfunded liability. If we look at the miscellaneous plan, The city have about close to 78 million in assets, about 112 million in liabilities, and that leaves you with about 34 million in unfunded liability. Of course, you all probably know that the pension liability number is really one giant estimate, that there are a lot of assumptions that are involved in coming up with that estimate, and the number is extremely sensitive to changes in those assumptions. So I just wanted to kind of give you an idea about what happens when these assumptions change. So currently, CalPERS is calculating your pension liability based on that middle row, 7.65% rate of return or discount rate. And that gives you a combined pension liability for both safety and miscellaneous of about $66 million. If this rate goes up by 1%, your liability goes down to $39 million, which is very unlikely that this would happen. If the rate goes down by 1%, your liability is going to go up to almost $100 million. And this is very likely that it will happen. CalPERS have already announced that they will be going to 7%, but then there are unofficial discussions and talks that we hear that they're really thinking more like 6.5%, 6%. So, but they have not, at least to my knowledge, they have not officially announced that. But I would say, in my professional opinion, that probably the $100 million is probably a more accurate number, given what we heard from CalPERS. But I just wanted to highlight to you how sensitive that number is to some of those changes in assumptions. The city also provide an additional benefit, the retiree medical benefit, what we refer to as OPEB, other post-employment benefits. And this was the cost over the last 3 years. And this is the funded status of that plan. So when we say the funded status or the plan assets, if the city did not set up an irrevocable trust and started putting money aside to pay for those benefits, we consider the plan to be zero funded, meaning that no money set aside. Even though you may have plans that you have put money in one of your funds, but because you have access to it and you can draw it at any time, from an accounting perspective, is not considered to be funded. So this $3.3 million liability next year, with a new accounting standard that the city will have to implement, this liability will be added to your balance sheet in addition to the existing pension liability. The last part of my presentation is really the only required part in the presentation, which is the required communications, what we have to communicate to the governing body as your independent auditors. So this slide really focuses on us, the auditors, and our responsibility in this process. We are mainly responsible to provide an opinion on the city's basic financial statements, to basically say whether it's fairly stated in all material respects or not. We're also responsible for evaluating the internal control over financial reporting and, of course, advise the city if we feel that there are any weaknesses or if it can be improved in any way. We're also responsible for evaluating the city's compliance with laws and regulations that could have a material effect on the financial statements. We're responsible for evaluating the tone at the top and making sure that management is sending the right message to the rest of the organization about the importance of internal controls, the consequences of violating those policies and procedures about controls, the consequences of committing fraud, and basically responding to audit findings, taking corrective action on audit findings. All of those are things that we assess in management and make sure that we have a good sense and good feel about management intention and what they're trying to do. And of course, if we had any issues there, then I wouldn't be standing here today. We would have probably resigned at that time. We're also responsible for ensuring that the financial statements are clear and transparent, and to communicate with the City Council the results of our audits. Management have a lot of responsibilities in this process as well. So management is ultimately the one responsible for the completeness and accuracy of the financial statements. That doesn't mean that we're not responsible in any way, but our audit only provide a reasonable assurance. We look at transactions on a test basis. We set thresholds, so we don't look at every dollar amount. So we are never in a position to give an absolute assurance about the numbers. We provide a reasonable assurance, which is considered to be a high level of assurance. But at the end of the day, management also retain responsibility for the completeness and accuracy of those financials. Management is the one responsible for establishing and maintaining internal control over financial reporting, for making financial records available to us during the audit process, for adjusting the financial statements if there are any material misstatements detected, for establishing controls to prevent and detect fraud, inform us of all known and suspected fraud, and comply with all laws and regulations, and take corrective action on audit findings. In terms of independence, obviously we are called independent auditors of the city, so we have to maintain our independence. This is solely our responsibility, so the city doesn't really have to do anything relating to that. Independence can be impaired in many ways. For example, if any of us have any direct or indirect relation with city employees or city government or city council, this could impair our independence either in substance or in appearance. So we circulate questionnaires to all of our firm employees. We ask them to identify any of those relations, and we remove these individuals completely if any of those relations have been identified. We have not identified any relations. Also, we evaluate any additional service that we perform for the city to make sure that it does not impact our independence as well. So, for example, preparing financial statements or anything like that, we will have to evaluate that service to make sure that it did not impact our independence. In terms of timing of the audit, we believe that the audit was performed in the time frame communicated to the city in our engagement letter. In terms of significant accounting policies, I'm not going to bother you with those, but those are the policies or the accounting standards that we considered this year and the city considered this year. Those are the ones that were due, and we have determined that the vast majority of them were not really applicable. In terms of estimates, I mentioned earlier that some of the numbers in the financial statements are estimated numbers, so just wanted to give you examples of what those numbers are. So you can see them at the bottom of the slide here. Sensitive disclosures, we just wanted to bring to your attention some of the note disclosures in the financials that we believe enhance the reader understanding of the numbers and give you valuable information. I'm pleased to say that we encountered no difficulties during our audit. We felt that city staff were very cooperative with us. They were very open to the audit, and we felt that the process went very smooth. I mean, I hope the city feels the same way, but that's how we felt. Significant audit adjustments and unadjusted audit differences. So there were some adjusting and reclassifying entries as a result of the audit process, and management has posted all of those adjustments, and I don't believe that any of them were material or significant. In terms of potential effect on the financial statements of any significant risk or exposure. So we normally communicate with the legal counsel. We obtain an understanding of all outstanding litigations and what's covered by insurance, what's not covered by insurance, in addition to, of course, all the liabilities recorded. And the idea here is to see, is there anything else that we're not aware of? And nothing that came to our attention that indicate that there are other pending uncertainties that were not disclosed in the financial statements. We are pleased to say that we had no disagreement with management. I mean, I'm sure in the course of the audit we have discussed many issues, and maybe we had different opinions at some point, but at the end of the day we were able to reach agreements, and we don't have any disagreement to report to you. Deficiencies in internal control. So the first thing, the good news is that there are no material weaknesses. Material weaknesses are the most severe of the control deficiencies, and they normally indicate that the financial statements are more likely to be misstated. But we have identified some issues that we consider to be significant deficiencies. The first one is relating to grant billing, where we felt that the city is just not billing timely for grants. And of course, this can have an impact on city's cash flow if the city is having to wait an extended period of time to get reimbursed for its funds. Payroll costs, I believe that was, I honestly don't recall exactly. I believe it had to do with just using budgeted information for charging payroll to grants, but I can be mistaken.
I can speak to that.
Yeah, please.
We used an estimated amount developed by a department and charged it through to a grant rather than actual hours supported by timesheets.
Yes.
So from now on, we will make sure we only use actual hours supported by timesheets.
And we didn't feel that the amount in question was significant, and that's why it's basically not impacting our audit opinion. And then pass-through entity responsibility. The city is a pass-through entity, which means that they are the recipient of grants and then they pass it through to other subrecipients. And with that, there are some responsibilities that comes with that, and some of them are basically providing enough information to the subrecipient about what is this grant, what is the grant number, who is it coming from, what kind of compliance requirement you have to comply with. So we just wanted the city to beef up some of these contracts and making sure that all the language and all the information is provided there to the subrecipient to ensure that they will be able to comply as well. These were all of the observations we have. We have obtained what we call a management representation letter from city management on December 6th. This is a letter that city management telling us that they have disclosed to us all known facts, that they have recorded all transactions, that they have disclosed to us all known and suspected fraud and a variety of other things. We're not aware that the city has engaged another accounting firm to consult on any audit-related matters. That normally happens when there's a disagreement and the city is seeking a second opinion or something of that nature. Other than our engagement letter and the representation letter, we had no other communications with management. There were no material uncertainties relating to events and conditions, and we have not become aware of any fraud or illegal acts that were not disclosed to us. This is a listing of all the new accounting standards that are coming the city's way. So I'm sure finance, as we get closer, they're going to be looking at them, and I'm sure it's going to keep them busy for a while. Not that they need to be, they already have a lot of stuff. But I want to say thank you very much for providing us the opportunity. It's been a pleasure working with the city. This is our first year, and we're very glad that we submitted a proposal and glad even that we got selected. So I want to thank you again, and I'm happy to answer any questions that you have.
Thank you. Does council have any questions for Robin or our consultant? Nope. Okay.
Thank you very much.
Thank you. And so do we have an action?
To just note acceptance of the audit, and then we'll go ahead and submit it to our awards programs
Okay.
that we do every year.
Okay.
Thank you.
Through the chair, my only comment is that's the most thorough explanation
Yes.
that I've sat through that actually was very easy to follow. I've heard many others, and that was the best.
That was a
So
good
I
presentation.
think it was great. Thank you.
Thank you.
And through the mayor, I'd concur with that statement. That was very thorough. How many pages were in that in the PowerPoint? But I think that any member of the public, any member of our team here at Yuba City should engage and spend about 20 minutes to watch that part of the video, and they'll understand a little bit more of the significance of what the audit provides in detail to everyone. So,
Any other comments? No. Okay. All right.
Thank you.
Thank you, Robin.